Hey everyone, it's Gerald here. In this video, we're going to go over United Healthcare stock. This stock has been all over the news. This is one of the biggest companies in the world, once trading at $600, now trading at $241. That is nearly a 60+% drop in the matter of a couple of months. And due to that steep drop, a lot of value investors are looking at this stock now, and we'll go over whether I think the stock is a buy, a hold, or sell here. So United Healthcare stock, once again, is all over the news. You see news of the CEO, the scandals with the Department of Justice, with fraud, and most recently, they reported their quarter two earnings, and they reported a medical loss ratio of over 88%. I believe it was 89% for the medical loss ratio, when the industry standard or their median is sitting roughly around 80%. And this was cited due to the fact that the company was not able to foresee that trend in medical expenses, right? A lot of people most recently were spending a lot of time going to their doctors, paying doctor's visits, and whether or not that's due to the pandemic, just overload people who were not able to go visit their doctors or go to the hospital or treat their chronic illnesses during COVID, that's sort of piling up in most recently, and that medical trend is hurting United Healthcare's margins. The margins have dropped to 5%. And the main question is United Healthcare able to restore its prior margins? Are they able to bring down that medical loss ratio here? So my thoughts about United Healthcare's medical loss ratio trends, as well as their profit margins being able to revert back, is positive. I do think this company is easily able to increase its margins. It's not going to be an overnight process, but most definitely a big company like United Healthcare. I think United Healthcare is like top 5, top 10 in terms of employees out there in the world right now. This company has been consistently outperforming the indices. It's a very, very successful company that just was not able to foresee that medical loss trend. With a newly reinstated CEO with Stephen Hemsley, who was able to get this stock trading into prior all-time highs, I'm very confident that this new management or prior management being reverted back here is able to reinstill a lot of confidence to investors, as well as bring United Healthcare back to its former glory here. The stock is also taking pressure from the Department of Justice. So there's a lot of policies and legislations that are being all dumped into United Healthcare at one time. But the Department of Justice is investigating United Healthcare under a criminal investigation due to the fact that they believe United Healthcare is frauding the United States government. The chances that United Healthcare is actually systemically frauding the government is quite fairly low. When I'm combining this and looking at the facts, like all of the insiders or majority of insiders putting up major cash into this company right after a steep drop, when the stock dropped all the way to the 250s, we saw Stephen Hemsley, the new CEO, put up $25 million into the stock at $289. The stock right now is currently trading at $240, so significantly below his entry price when he first got in around May 16th. We also saw John Rex, the prior CFO, increase his position by 9%, put $5 million into the stock at that same time at $291. We also had Kristen Gill increase her position by over 3,000%. She put over $1 million into this position at 271, all trading below current valuations here. So when I see big insiders like this, big inside purchases into a company that is undergoing a criminal investigation, that tells me or infers to me that there's a very low chance that a systemic issue of fraud is going on in the company right now. Would you be putting up millions of dollars into a company you know yourself is doing something wrong and you're being investigated for it? The chances that is happening is fairly low. So overall, you're getting $32 million in insider buying within the last 3 months of trading here. The last 0 to 3 months, we had no significant insider trading as well. If there's any signs of fraud or mischievous activities, don't you think that insiders would be selling the stock? And when you see here, you only see a 179 $100,000 sell here. Another catalyst for this company, our 13F filings are coming out next week. I believe it's coming out on the 13th or the 14th, and it's very likely that hedge funds and super investors, those who are seeking for value, are going to invest into this company. Why is that? This company is trading at multi-year low valuations. The trailing PE right now is 9.84. They did just reduce their earnings per share guidance for this year to roughly around 16. So I think this brings the price to earnings roughly to around like 10 to 12 is that range. But it is still trading significantly below its prior valuations here. The stock typically on the 5-year median trades roughly around 24, now with a trailing PE anywhere between 9 to 12 right now. So less or over half its prior valuations here. Once again, this is a company that has a vertical integration. Once again, this company is one of the biggest companies in the world with over 400,000 employees. Top 10 in the whole world. So Amazon's, your Google's. This is a massive, massive machine, massive company. This is a company that's producing 12 to 14% revenue growth in 2025. This has a company with a vertical integration business model. So they have the insurance side of things. They have Optum, which is their health services, and their PBM model. So they are not just an insurance company. They are extremely efficient with their finances. And you can see it with their scale. They house over 70 million customers globally and have $400 billion in 2024 revenues. So the main question, like I said, has to be what is driving down the stock? Number one, most recently, it's earnings. They reported high medical loss ratio. Do I think this is easily overturnable? Definitely. This company of this stature is able to raise premiums, and it's very difficult for consumers like you and me who have an insurance, say with UnitedHealth Group, to go from one health insurance to another, especially with one that has such vertical integration and operational scale such as UnitedHealth Group here. So with those raises in premium, that is going to increase their margins and overall their earnings. So with the earnings per share, so most recently the company guided for 16 earnings per share for the year. They are obviously sandbagging the earnings per share. This company, this CEO has done this time and time after again, sandbag the guidance, get people's expectations to be low, and then overall outperforming those expectations. The probability that earnings per share remains low is quite low. This is a company with a share buyback program. So what happens when a company buys back their shares? That increases the earnings per share. You own a bigger slice of the pie here. You can see in the most recent quarter as well, the company was buying back aggressively. Right? This is a company that reduced its share count by nearly 1% most recently. But you can see the overall trend in the shares earnings, or the shares outstanding here, a dramatic drop from $920 million in shares outstanding to 914. Sitting at these low valuations, it's very likely this company is going to be ramping up their activity in the buyback program. You see that supported by the fact that insiders themselves, right? They believe that the stock is undervalued. What do you think the management is doing during these lower valuations here? They are buying back their shares. So that earnings per share is definitely going to be a tailwind in the future, which is why I believe sitting right now with trailing PE anywhere between 9 to 12 is sitting at very, very hefty valuations, and it's something that cannot be ignored here. Looking at this company's intrinsic value, we have an intrinsic value of $450, so it's sitting 87% away from current valuations. This intrinsic value is going to go be lower just due to that lowered guidance, but we have intrinsic values anywhere ranging from 350 to 400, still significantly below current valuations, which is why I believe it's offering an asymmetrical risk right here. Very limited downside to a very massive upside here. And if you're trading this stock for the long term, this is going to offer very safe way to compound your gains. Not to mention, the company has a 3.7% dividend. So if you hold this stock for 1 year, you would be yielding 3.7% on your money in and of itself without share appreciation here. Looking at hedge funds, like I said, I believe in the 13F filings that are to be reported in the next week or so. A lot of hedge funds, a lot of super investors are going to be increasing their positions or opening positions here. We all see here John Kim of the prior quarter in quarter one 2025 increased position by 40%. He's down about 50% in his position. He has $44 million here. We have here Bill Frells of Mares and Power here increases position by 4%. He has nearly $474 million here. We see people with very significant money, $784 million increases position. So overall, I'm seeing heavy allocations into a company like United Healthcare amidst all the turmoil, amidst all of the negative press with the Department of Justice claiming fraud or investigating for fraud. All of these people, hedge funds, these super investors are seeing value in this company, and they understand that even if this company were to be found for something like fraud, a lot of the price action is priced in. Right, just looking at the company's valuations, company right now is essentially projected for 0 to low growth, and eventually, if it were to fall even further, negative growth here. So the chances that a company like United Healthcare, which is able to consistently grow its revenues by 10 to 15% revenue growth, the chances that is happening for the long term is quite low. Looking at Wall Street Analyst, we did have some revisions most recently off of the quarter two earnings here. Piper Sandler did maintain a buy. They increased their position from $266 to $317 for its price target, which is about a 20% upside from today's valuations. We also have here UBS buy rating 302 to 385 price target, so 27% upside. We did have Robert Baird with a sell rating, and he brought his price target from 266 to 198. A little investigation onto Robert Baird. He doesn't have the best track record. I think he has negative returns very consistently. So sure, if you want to follow a negative and unprofitable analyst, I'm very surprised this guy even has a job still. Then you can sort of heed his warning and sort of take his price target for what it is. Off of that most recent news, it actually dropped the stock. Like I said, retail traders will see a headline like that with a analyst from a firm like Baird drop the price target, and the stock reacted negatively. And that is actually an opportunity for us to take advantage if we do our research here. Once again, when we're looking at the insider trading, we have $31.6 million of insider buys within the last 3 months. Most notably, the new CEO with $25 million of his own money, sitting at $289. This is a CEO that formerly retired that is coming back, and he's incentivized to grow the stock price. I think for him to make money on his option contract that he took for the role here as CEO, the stock needs to go over $308 here. So the stock just going back to $308 would provide massive upside here. So once again, the stock is trading at lowest valuations it's essentially ever really traded at. And this company is still executing really well. This is a company that grew 9.8% revenue year-over-year growth, and this is a cash flowing machine. This is a company that reported nearly $25 billion in free cash flow with an 11.43% yield. Right? This is a company just consistently over $20 billion in free cash flow. Having that amount of free cash flow, what does that allow them to do? They have many different levers in terms of acquisitions, in terms for growth, in terms of their dividends, in terms of their buyback programs. They have a lot of weapons in their arsenal just to the fact of how big and how profitable this company is here. Looking at the company's profitability metrics, it's 7% for the return on assets, return on equity of 23.8%, and return on capital employed of 16.53%. Once again, we do have margins of 5%. That is not good, and that is quite low. So do I think this company is able to increase their margins? Most definitely. How did they do that? By raising up their premiums. They have a moat. They have vertical integration. There's no doubt in my mind this company can maintain or even grow their margins in the future here. And once again, with their sandbagged earnings per share of 16, like I said, this company has an active share buyback program. So that earnings per share is very likely in the foreseeable future going to be increasing. So it's very likely a sandbagged earnings per share, but you can take it as what it is. The stock is still trading at the lowest valuations it's ever traded in the 5-year. Looking at the company's technicals, I first want to check XLV here. This is XLV, which is an ETF that tracks the overall healthcare sector. UnitedHealthcare comprises a decent portion of this sector. So it's good to look at the overall sector, which is XLV here. We saw the stock make a double bottom here. We had a double bottom. We bounced off that double bottom. Right now, we're quickly approaching the 50 simple moving average. If we can get over the simple moving average, this will act as resistance for the short term being. So I do expect a potential rejection off of this 50. But if we can get above this 50 moving average, that will leave room for essentially move all the way back up into the 200 simple moving average and a very sustained bounce for a company like UnitedHealthcare stock. Looking at UnitedHealthcare specifically, I'm looking at the stock at the daily time frame. I'm seeing and identifying an RSI divergence here. We see here the stock price action is going lower, but RSI is trading up higher. We also see an inflection in the RSI here. So we are sitting at a very strong level of demand. We are sitting about 20% away from the 50 simple moving average. So a mean reversion is likely to occur either to the 50 or even into the 200 moving average, right? The law of mean reversion states that price action tends to typically revert back to the mean meaning back to the 50 moving average, back to the 200 simple moving average here. The stock is very, very oversold on the daily time frame. RSI is sitting right now at 26.85, right? We're typically at 30. That's when it's oversold. We got even way below that at 26 on the daily. And not even that, we're seeing the RSI for the weekly trading at 25. I'm going to show you how ridiculous this is here. Tracking this RSI here, the weekly RSI has not ever gotten this oversold since 2008. You guys remember what happened in 2008? That is a global financial crisis. So we are essentially having a move equivalent of the global financial crisis here. Looking at the monthly time frame here, the RSI is sitting at 29.9. It looks like the stock was retracing into that 200 simple moving average, just about to that 200 simple moving average. I think it's very likely we are going to get a bounce and mean reversion up into here. At the very least, have a dead cat bounce. So an entry point roughly around 240. I do think the bottom is very near. I think there's projections for a lot of people entering into the 180s to the 200s. I do think it is possible. Do I think it's probable? Not necessarily, even though there is heavy selling pressure right now. We are just so oversold on all the time frames that there has to be a bounce. There's just very likely going to be a bounce, and I believe that catalyst is going to be the 13F filings that is coming up next week for the stock market here. We are also trading at all-time highs for SPY here, and I believe there's going to be a significant retracement for SPY and all of the stocks that have run up significantly, like tech stocks or companies like HIMS. Where is that money going to be reverting back to? Into value, the ones that are not trading in that same market cycle. So that leaves us with essentially UnitedHealthcare here. So this is a completely different market cycle than what's going on in SPY here. And that's why I believe UnitedHealthcare is one of the best opportunities in the stock market right now. So that is my thoughts on UnitedHealthcare. Let me know what you guys think down below. And if there's another stock you guys want me to evaluate, shoot that in the comments and I'll be looking into it.